Hello, ladies and gentlemen, welcome back to my channel. And today we are going to do sector analysis, and I am going to cover up a lot of subtopics like which stocks to buy, current scenario in real estate sector, how the peers are doing. There is interest rate hike. So in recent time the interest rate hike was paused from 6th April. So you see here, from after the uh, pause in interest rate hike, the Nifty reality means the index which is having all the construction companies. So that index has really taken off, and we know that Nifty reality index has given 181% returns. And if you compare with uh, Nifty is the top 50 companies of India. If you compare Nifty 50 with the reality sector or construction sector, you see that Nifty has grown only by 38%. Now, why this has happened? What is the reason behind it? So, first, we see that a greater affordability, and with higher household income, you know that both are working parents. If you see, both the couples are working. If you see now in the nuclear family, record low of inventory levels. I will explain you later why this is happening. Growing preference for branded inventory from organized players, and here we come to know that there is a switch from unorganized sector to organized sector. There has been a switch. So a strong pull for luxury and premium products. If you see, the premium products are like sea facing bungalows or flats, whatever this reality sector has to offer. So let us go to the next. If we move toward the next, then we see the performance, like just what I said is, if you see previously market was consolidating means market was moving just sideways, and suddenly after when the interest rate hike was paused, so the logic that is, uh, this is the bank, and like we say, this is the real estate companies. So if interest rate is high, then to borrow money, and with that highly borrowed money having high interest rate, that becomes expensive to do construction. So whenever the interest rate hike was paused, means interest was continued at the same rate, that time the real estate markets or the players in the markets will be beneficial, because they can borrow money at a lower rate or at a constant rate. Uh, so in this situation, if you pause the interest rate hike, then it is beneficial for them. And if we see here, these are the main players, like these are the main players in the real estate market. Nifty reality index grew by 180%. And if you compare with Nifty index, this is Nifty index. If you see Nifty index and Nifty reality, best performance was by these companies. And we can say that these companies have like moderately performed. Company like Soba, PayPal, and Loda. So this company has like given good returns. You see 352, 346, 232, and this company has given like 71%, 81, 110. Even though moderate returns, they are very good and attractive. Even in this scenario, this company who have given even moderate returns will help you make good money in stock market. So let us go to the next. let us see the outperformance of Nifty Realty was aided by strong fundamental performance. So if these are the companies, and if you see from quarter 4 FY23 to quarter 4 FY24, if you see this company uh, was not able to sell whatever it had produced. So this company has failed in sales, DLFU. So it has given negative 82%. You skip this company. And if you see from FY23 to 24, just negative 1.9% change. So you skip this company, as well as there is another, even this Oberoi Realty and all. So previously 6,000 crore was the sale. Now the sale has reduced to 1,775. So if you see, no, Oberoi Realty and all has given negative 53 returns. If you compare, if you compare the sales, if you take the total like listed developers, so developers has given like 27.3% returns. If you take this full uh, company as a group, full company, you take it as a group, you club it, then you see that 27.3% year on year growth in pre-sales. So 10% of the growth was driven by realization and by volume growth. So realization means, if I buy a property for 1 crore and I then sell it for 1.5 crore, okay, so if I do that, my realization will be 1.5 crore. So this is the meaning of realization. And another reason would be brand inventory, improved realization on premiumization. Like people want to buy sea facing flat bungalows, like premium, they want to go for premium products also. Now whatever business you indulge in, you must make profits, you must be able to collect money, you must be able to do cash flow. So if you see, real estate sector is highly capital intensive or money intensive. So from FY23 to FY24, let us see. If you see this, a company has given the highest collection like 53, and if you see Oberoi Realty and all was has failed to collect, it has given negative 47 returns. And if you see, no, if you take the full group was able to take only 10% collection change. And if you take operating cash flow, the full group, the change from FY23 through FY24 was 69%. So 69% year on year growth in operating cash flow from our group, and strong operating cash flow deployed towards business development and for growing demands. So the surplus was used to retire debt. So another thing is, if you see minutely, these two, and these four, like six of these companies, like DLFU, Shobha, and Lod Oberoi and KDPL. These companies were able to reduce their debt to equity ratio. These six companies were able to improve from the other companies. This group is of 9 companies. From that, only 6 were able to improve that too, and other companies have deteriorated. You see, now this has increased. Debt to equity ratio has increased for other remaining companies. So let us go ahead. Market dynamics. So market dynamics was with absorption outgrowing launches and recording lower inventory. So let me explain this term called absorption. When we concern about this real estate sector, absorption means whatever previously buildings or previous apartments, hospitals, so whatever construction that we have, whatever buildings holdings that we have, that was rented, it was leased, it was bought, sold. So this is absorption. And we take into consideration launches. When I talk about the word launches means recent construction, ongoing construction of projects that are coming up, bookings are being done. So if you see, if I take the calculation, pan India. So whenever I say pan India means the this whole group of regions that I take, I want to club it and say pan India. So pan India absorption grew by 21% year on year, and the record was of 1082 million square feet. And because of the strong demand of momentum and with better product mix, so whatever products I have discussed earlier, so if you see Hyderabad, Kolkata, and MMR. MMR is Mumbai municipality region, and NCR is Delhi and New Delhi. So that is called National Capital Region. So Hyderabad, Kolkata, and they were able to have a growth of 34.4%. Hyderabad was able to have a growth of like it is first come to MMR. MMR is like 7%. Kolkata 25.9%, and Hyderabad was 36.4%. So this is about the growth. And if I talk about absorption, absorption for MMR was 17%. Then for Hyderabad was also 17%. For Pune, it was 12%. So we see that launches are having a lag. The launches are lagging behind. They are not competing fast. Uh, Launches have lagged absorption, and absorption is happening faster, and launches are having a lag. So the historical inventory has gone down of 11 months. Still we have pending inventory of 11 months. Like if you see NCR 8.2% degradation, and MMR like 7.9, whereas Pune 1.8%. So significant improvement needs to be done. If pan India launches have only grown by 8.4%, if you compare with absorption, NCR, MMR, and Pune, so inventory levels have touched a low of 11 months. The 11 months we apartments bookings mean that buildings are still pending, and we see that launches are also happening relatively so low because the builders or contractors are being very cautious about this because of the current rainy season. So we compare pan India with the other regions. So this is FY24, FY23. If the same lag will continue, if the lag is happening in FY23, the same situation may continue. So if you see FY23, pan India is having a lag of 11 months. Mumbai municipal region is also 11 months, NCR 9, Bangalore 8 months, Chennai 13 months, and Hyderabad 14, Kolkata 13 and Pune 7 respectively. So preference for quality and the record for low inventory and constraint for launch drive. Launch drive have seen a 10.6% year on year growth. So even though we are able to achieve 10.6, the reasons are stated here why this is happening. So we see a price growth of 10.5% across India with low inventories and premiumization. See, Kolkata is not having any growth. Pune just 9. Highest is NCR, Bangalore, and you see the average pan India is like 11%. Why this happening, or how we are able to achieve this 10.6% growth wise? Constrained supply, high demand for premium and luxury products, a greater preference for organized and brand inventories, and market is having going through a consolidation. And also country grew by 10. Country means the same pan India against CAGR of 5.4% of FY18. And also now we know that people are turning back to the offices. Previously work from home was happening, and also uh, office space is generating revenue. Pan India absorption grew by 33% year on year, 192 million square feet in second half of FY25. So this calculation I have done taking the assumption of 10%, and with that I get 33% year on year with the calculation. For tier 1 cities will contribute 63% to the total growth. This 33% contribution, in that mostly the work will be done by tier 1 cities. And see, already we have a backlog in launches, means we are lagging behind. So that lagging behind will have a growth of 19% improvement, 147 million square feet. Kolkata, Bangalore will see a growth of 291 and 127% growth in the launches. MMR, Hyderabad and Bangalore will have 36 million square feet, 26 square feet and 17 million square feet absorption in their respective cities. And the growth of Kolkata and CNM will be 68 and 62 and 45%. And also if I apply the same assumption and calculation for that MMR second half of FY25, if I do the prediction and apply the same assumption, then I will get that MMR will have 10 months of backlog. NCR will also have 10. Bangalore will be like 9 months. Chennai will be like 13 months. Hyderabad like 15 months backlog. It will continue. Kolkata also like 12 months. Pune 6 months. So Pune is actually growing faster. Bookings are happening for launches. So this is our favorite part. Now, what to buy? You see DLFU may give 29% returns, Shobha 10%, PL 7, Brigadier 12%, and you can actually skip this rating wala company. GPL and all, no GPL and all, you please skip these two companies where hold rating is given. You can skip these companies and you can invest in others. Loda company is also good. KPDL is also good. Like you can like make a portfolio of this. And we see that pre-sales, this calculation I have done taking 10% assumption, like there will be a growth of 10%, then if the sales are happening, then only these targets will achieve, then only like uh, the stock price will spike up. So this is all I wanted to talk about real estate market. So thank you friends, I hope you have enjoyed my video. Please like and subscribe to my channel. Thank you friends.